Ladies and gentlemen, welcome back to the channel. Tesla stock today is down about 2.5%. And in today's episode, we're going to talk about exactly why that is, what is happening in the broader markets today that is causing this weakness. See, it has to do with the AI trade, what Michael Burry just said and what SoftBank did. Now, there's still the elephant in the room. That is, how is the economy doing? There's a lot of estimates, there's a lot of people making their own assumptions, but there's not any certainty besides earnings that we've gotten so far. In today's episode, I will explain where I think the economy is and why this is the most important factor right now for markets and for Tesla stock. Now, we're going to be going over an update on the government shutdown as well as many other headlines from government officials today. And as always, we will cover your Tesla stock breaking news. What's happening in Tesla's world. We'll take a look at the option activity and what the short sellers are doing as well. Do me a quick favor before we get into today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community as well, but more on that in a few moments. Let's get started. So we do actually have quite a bit of big news today for Tesla, but I actually want to start with what's happening. Why are markets coming under pressure today? Why is Tesla down 2.5%? It doesn't have anything to do with Tesla stock specifically, so we will cover your Tesla news, but towards the end of this video, because we have more pressing things to deal with at this current moment. So first things first, it seems like bad news is stacking up for AI, if you will. I'll call this quote unquote bad news because is it really bad news? Not really. First things first, SoftBank sells its entire stake in Nvidia for $5.83 billion. SoftBank sold 32.1 million shares of Nvidia in October. It also sold part of its stake in T-Mobile for $9.17 billion. This is not the first time SoftBank has cashed out of the chip maker. Despite the sale, SoftBank remains tied to Nvidia through its other artificial intelligence ventures. So it's not like SoftBank is, getting out of all AI, right? They're getting out of Nvidia, where most of the opportunity is probably already gone. Does that mean AI is dead? Absolutely not, okay? That just means SoftBank probably sees better opportunities in other companies, which makes sense. The law of large numbers says once Nvidia is a $5 trillion company, it's going to be even more difficult to double versus the next guy. Okay, it's the law of large numbers. It becomes harder to grow. That doesn't take much explaining, but Nvidia is down about 3.5% today, and this is pulling down the broader AI ecosystem. You've also seen the Big Short investor Michael Burry accuses AI hyperscalers of artificially boosting earnings. Now, he says, quote, understanding depreciation by extending useful life of assets artificially boost earnings, one of the more common frauds of the modern era. He says, quote, massively ramping capex through purchase of NVIDIA chips and servers on a 2 to 3 year product cycle should not result in the extension of useful lives of compute equipment. Yet this is exactly what all the hyperscalers have done. Burry estimated that from 2006 through 2026 through 2028, the accounting maneuver would underestimate depreciation by about $176 billion, inflating reported earnings across the industry. He singled out Oracle and Meta, saying their profits could be overstated by roughly 27 and 21% respectively by 2028. Now, these companies have not commented on this, but this article goes on to say that it's very hard to prove this, that this is a serious accusation against these companies, but it's almost impossible to prove this because companies are given a lot of flexibility in how they depreciate their assets. But it just adds to the worry you've seen lately in AI, which is interesting because you see a company like Apple that is really starting to excel in the last, couple of days here as the AI trade has started to falter a bit. Apple, the company that has not really been investing in AI, is now seen as, the cream of the crop, right? Forget Nvidia, forget the AI trade. Let's go into Apple. That's kind of the mindset. You're seeing almost all AI stocks are selling off today, whereas staples and healthcare and more value-oriented companies are doing the best. Now, there's a lot of other news we will get into in just a moment, but I want to put this out here for everyone. I want to make this as clear as possible. AI is going to be with us for a very, very long time. It's not going anywhere. It's like the internet. It started and it never left. That is AI. Wall Street, they get nervous every now and again. They forget their lefts from their rights. They forget, about certain companies from time to time. But you always want to go back to the basics, okay? Is AI a real thing? Yes. Are companies investing and adopting in AI technologies? Yes. Does AI have a long growth horizon? I think most people would say yes. Now, you obviously want to be careful not to invest in the highest flying stock that is trading at 2,000 times sales, okay? You want to be a little value oriented in a quote unquote hypey space, but this is not the end of AI. That's the funniest thing, for people to be calling this a bubble. We haven't even gotten started yet. Now, I would argue the biggest thing affecting this market right now is the continuing government shutdown. See, keep in mind, we were heading into the government shutdown with already really low expectations for the economy. Back 40 days ago when the government shutdown started, a lot of Wall Street, nobody really thought we were in a recession then, 40 days ago. But nobody thought the economy was super strong either from what I've heard. Well, 40 days later, thousands of flights being canceled, food stamps being delayed, and people are a little bit nervous, okay, because this is starting to hurt the economy definitively. Reducing air traffic is a definitive harm to the economy. The problem is the government is shut down, so we just don't know how bad it is. And Wall Street, they're under this logic right now. Hey, we could be in a recession right now and just not know it. Or the economy could be weak but not recessionary. That's really the two, probable outcomes at this point, okay? Nobody's thinking the economy is actually doing well right now. And I'm not going to say the economy is doing great, but I'm not going to say the economy is in a recession. I think the economy is probably doing a lot better than most on Wall Street think. I know I've talked about this in quite a few videos, but it's really important to understand this so you can come to your own conclusions. But on Friday, we were supposed to get the jobs report. Wall Street was expecting negative 60,000 jobs. That would be the worst jobs report since the COVID crash, by far. You don't really get negative jobs reports, not negative 60,000. That really doesn't happen outside of recessions, okay? So Wall Street's saying, okay, we were expecting negative 60,000 jobs, recession, okay? That's why a lot of stocks have come under pressure. Now you're getting Michael Burry, you're getting SoftBank, and a continuing government shutdown. And there's a lot of pressure on the AI trade. There's a lot of pressure on the higher value areas of this market. That's logical, right? If we go into a recession, would you rather own, I'll just pick on a company here. Would you rather own Tempest AI or Big Bear AI, or would you rather own Apple? Simple, right? Should be a no-brainer. Well, that's what Wall Street is doing. They're selling those other stocks that are recession vulnerable, and they're buying a stock like Apple. They're buying some of the healthcare, some of the value. But at this point, if the expectation is negative 60,000 jobs in October, if you come in at negative 30,000, which is still a really bad number, that's going to be seen as really good news. So you're set up for an upside surprise when the government does reopen. Now, the government, Senate passed the vote to open the government. The House is coming back, and they're likely to vote on that tomorrow. Assuming that gets approved, it goes to Trump, and the government reopens tomorrow night. Now, we're going to be getting, in that instance, economic data on Thursday and on Friday. On Thursday, we will get some Fed speakers, a 30-year bond auction, but as long as the government is open, we're going to get the inflation numbers, core month over month and year over year, as well as headline, initial jobless claims, and continuing jobless claims. We should get the whole stack, right? So it'd be 1, 2, 3, 4, 5, 6, 7 initial jobless claims all at once, okay? And we got the last CPI report, so this CPI report will be for October. Now, if the economy is as bad as Wall Street thinks it is, inflation is going to plummet, okay? Inflation cannot survive in a recessionary economy. It just doesn't work. The economics just do not allow inflation to survive in a weak economy. So you've heard a lot of people in the government say that inflation is making progress in recent days. Well, why is it making progress? Okay, if the government reopens on Wednesday and we get a really low CPI report, that's potentially not a great sign for the economy, but it would be good for the Fed. It would be good for inflation expectations. Okay, and there's the whole bullish side to that I'll spare you the 10-minute long rant. But I think a lower than expected CPI report would be good news initially, but cause some concern until we get the jobs report. Okay, the jobs report, if the government opens on Wednesday, will probably come out on Monday. It'll take a couple days and then they'll release it. Now on Friday, we will get retail sales month over month for September and October, PPI for September and October, as well as business inventories. So this will give us a better understanding of the economy. And that's what we really need right now. Who gives a shit what Burry says? Who gives a shit that SoftBank sold their stake in NVIDIA? Nobody, okay? That's just a reason to sell AI stocks because some people think we're in a recession right now, okay? And that was already happening. Then you get other news like that. And again, you can see how the fear is just stacking on top of itself at this point. But I am willing to make the bet that when the government does reopen and we get the economic data that we have been missing, the economic picture is going to look better than where the expectations are today. And that's what gives you an end of the year rally. Mix that with hopefully a lower than expected CPI report, which would be good. And, trade deals with China, things like that have been positive, but have been overshadowed by the government shutdown. I mean, again, Trump lowered tariffs on China by 10%. It looks like things are really headed in the right direction for U.S.-China relations. Have markets reacted positively to that? No, because the fears of a recession is too much to cause stocks to do well, really no matter what happens. That's why we've been fading any of the short-term rallies that we have seen in this market, and especially the, higher risk areas. In the news today, Trump praises Johnson on the shutdown ending. President Trump congratulated House Speaker Mike Johnson and Senate leaders for ending the government shutdown, calling it a very big victory. During a Veterans Day speech in Arlington, the Senate has approved the spending bill and is now headed to the House. Apparently, per Politico, the White House officials are furious with Bill Pulte, the Federal Housing Finance Agency director, who talked the president into suggesting a 50-year mortgage plan. Donald Trump says, quote, "We are opening up our country." White House senior advisor Hassett says that inflation outlook is really good. He told CNBC that inflation is trending positively with recent CPI data coming in below expectations. He said momentum is moving towards the Fed's target. On housing, the White House is exploring ways to make living costs more affordable. White House senior advisor Hassett on surveys affected during the shutdown says, I've been told some economic surveys have not completed. Hassett says we will be back at 3 to 4% growth pace by early next year. Now, the House Minority Leader Jeffries says, I will oppose the stopgap bill without ACA subsidies. So a little bit more a doubt around the government reopening. That's probably affecting markets somewhat today as well. Now, in the news today, the House Rules Committee is looking to meet tonight around 6 to 6:30 p.m. Eastern Standard Time to advance the government funding package for a floor vote tomorrow, per sources with Politico. So we could be getting some headlines in after hours if this is going to hit the floor for a vote tomorrow. Now, again, when you have estimates like this, it's hard for the markets to do well. Like, I'm surprised stocks are not full-blown crashing right now. Wall Street Journal, citing Goldman Sachs, says that the U.S. likely lost 50,000 jobs in October. And according to the ADP, the U.S. lost an average of 11,250 private sector jobs in the 4 weeks ended October 25th. So this doesn't look nearly as bad as some of the other Wall Street estimates. Now, again, getting into Tesla stock and your Tesla news, it's no surprise why Tesla is down 2.5% today. With the AI fear out there, the fear of a recession, there's a lot of fear, okay? Tesla down 2.5% with that kind of backdrop doesn't even sound bad to me. In the news today for Tesla, Truist reiterates their hold on Tesla and a $406 price target. Truist Securities analyst William Stein reaffirmed a hold rating and a $406 price target on Tesla. He said shareholder approval of Elon Musk's pay package removes a key risk of Musk leaving, but noted Tesla's physical AI projects like FSD, robotaxis, and Optimus remain unproven with little revenue. You can see this headline that says Tesla's pay deal ties Musk's rewards to shareholder gains. Elon Musk's $1 trillion Tesla pay package eases concerns he might leave to pursue other ventures and strengthens his control of the company. Truist analysts say the plan aligns with shareholder interest as Musk earns the award only if Tesla hits major market cap and performance goals, potentially boosting the share price by up to 384%. But I mean, let's face it, the top tranche of Elon's compensation package is $400 billion of EBITDA. Last year, in the last 12 months, NVIDIA has only done about $40 billion in EBITDA. So, if we hit that top tranche, Tesla is going to be a $10 to $30 trillion company. So now Tesla's FSD supervised is being covered on Israeli TV. Now, Elon Musk's 2025 CEO Performance Award shares have officially been issued, split into 12 tranches with 423.7 million total shares, according to a new SEC filing. Each tranche can only be earned if Tesla hits strict performance goals. Earned shares vest in 2033 or 2035 are held in Musk's revocable trust and are voted by proxy, meaning Elon can't currently vote them himself. The earning of each tranche is subject to satisfaction of certain conditions. If earned on or prior to September 3rd, 2030, the tranches of restricted stock will vest on March 3rd, 2033, and if earned from September 4th, 2030 through September 3rd, 2035, the tranches of restricted stock will vest on September 3rd, 2035. In each case, subject to satisfaction of certain conditions. And as Sawyer Merritt says here, he says, quote, time to lock in and push full steam ahead into a future of autonomy, robotaxis, Optimus, and sustainable abundance. And that's exactly it, okay? We covered a couple of days ago that Tesla is actually literally clearing the ground to start building their Optimus factory that they say will be able to produce over 10 million Optimus bots per year. Now Tesla's really going full steam ahead. Okay. If you were Tesla, if you were Elon, like, obviously you'd want to give shareholders a reason to vote for your compensation package. You would want to give them, signs that you are going to succeed in AI, like doing robotaxi and things like that. But until the compensation packages was approved, it didn't make sense to start building an Optimus factory because, as Robin Denholm said, the head of the board at Tesla, if Elon leaves the company, Tesla's effectively just going to be a car company. She said that's fine, but we believe Tesla can be much bigger than that. So why would Tesla start building an Optimus factory before they secured Elon to be the leader of Tesla for the next 10 years? Now it's time to, as Sawyer Merritt says, lock in and go full steam ahead on AI. And we have some pretty incredible footage here where FSD V14.1.4 actually seen this van or truck coming down a one-way street, and FSD, which was in the road, backs up, gets out of the way, lets the truck pass, and then continues on its way. That's pretty intelligent. Now, some Tesla Model Y performance order holders in the US are starting to see their estimated delivery timelines moved up, with dates of November 9th through November 21st, with deliveries that could start as soon as this week. The Tesla Model Y and Model 3 are the top world's best-selling EV rankings in September. During the month, Tesla was able to sell 140,904 Model Y crossovers and 67,374 Model 3 sedans across the globe. Now, Elon Musk shared this of Ford's CEO that says, quote, "I was very humbled when we took apart the first Tesla Model 3. When we took it apart, it was shocking what we found." Farley said that Ford's Mustang Mach-E had around 1.6 kilometers more electrical wiring than the Tesla, adding extra weight to the car and requiring a much bigger and more expensive battery. The teardowns convinced him the company had to change to match its new rivals. Farley said the rapid rise of China's EV companies means Ford can't afford to walk away from EVs. Now, in option activity today for Tesla stock, it is a slow day. You have 49 different orders totaling $34 million with a positive order value of 73%. So it's a very slow day from hedge funds and institutions. Now, short interest of free float sits at 2.59%, which has come down from about 3% recently, and you still have 73 million shares sold short. So I think when things really get exciting for Tesla is when the government shutdown ends, we start getting economic data. In my opinion, that's going to show the economy is better than feared, okay? That's how Wall Street works, right? If you're sitting with a certain expectation of the economy, negative 60,000 jobs, let's pick on that, and it comes in at negative 30,000 or negative 20,000, that is a lot better than feared, and that wipes away some of the recession concern, and that gives you upside in markets. Now, if you come in at 60,000 jobs, you're meeting expectations. It shouldn't be a positive nor a super negative catalyst, although I could see Wall Street get kind of nervous over that. If it comes in worse than that, you're screwed, okay? Watch out below. But I would view that as a very low likelihood at this point. Now, again, for Tesla stock from a technical perspective, you do see the stock that has recently found support right at the 50-day moving average. You've continued to find solid demand for the company, for the stock that has come in around that 50-day moving average, not quite testing it like you did on November 7th, but finding some good demand right about at that level. Now, you want to see the stock hold above that 50-day moving average. If you fall below that, you're setting up for what could be a gap down into the $375 area. That is where your 100-day moving average is. Now, I really only think that happens if the markets get worse, if recession fears do rise. If that happens, there's nothing Tesla can do. Elon's comp package isn't going to save Tesla stock. Robotaxi expanding into a new city is not going to save Tesla stock. There's nothing you can do if it looks like we're going into a recession. That's going to give you downside. That's going to be a problem for this market, okay? So I'm optimistic. I don't think the economy is as bad as people think, and I think AI is alive and well. That's all indications from earnings have told me this. And that's the biggest thing we really have to go off of at this moment. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check the link out down below in the description of today's episode if you guys want to come join the trading community where we are going out to find the next big winners in AI. We're looking under the surface, under the hood of this market, if you will. I don't want to buy NVIDIA. The opportunity's gone. Everyone knows about NVIDIA. People that aren't investors know about NVIDIA. I want to find the stocks that Wall Street does not know about yet that are in emerging industries with exciting things happening. And that is what we are doing over there. Link down below in the description of today's episode if you want to come join. But with that said, have a great rest of your day, and I will see you in the next one.